As far as construction spending, the last piece of data that came out on Monday, May 1st, that came out at 0.3, which was much higher than the 0.0 that was expected, and definitely a lot higher than the negative 0.3 that we got the previous month. And the first two are for April, this one's for March. But definitely shows that new construction is the winning real estate to own. Due to them, offering incentives to get new homeowners in the door, like additional upgrades for free, or a locked-in lower than market interest rate for a select amount of years, or just having really competitive pricing just due to the housing market running so much recently, commodities running along with them. And now that commodities are down, labor is more accessible. You can finally build houses cheaper in a lot of places than the existing inventory. It's definitely area dependent. Local labor markets, local commodity prices, local real estate markets, probably most importantly. Lots of markets in the U.S., new construction is genuinely very appealing. Plus, you have the new additional incentives, which owners in the used market currently are having a tough time accepting the prices because they haven't really came down. So they haven't really had that much of a reason to be looking to unload quickly to whoever gives them somewhat of an offer, just because the inventory within the entire real estate market's just been so low that who are they going to compete with? Even though there's still no buyers, there's even less homes ready to sell, so you're going to buy one of them if you need to buy. And there's the reason why there's still no buyers, and that's going to take a long time to come back, and there's no seller. Like, the whole process is slowed down as far as total inventory moving, or the volume of sales, as we like to say in real estate, is mainly just because mortgage rates are so high, with still 30-year mortgages sitting at 6.5%. This is wildly higher than what people were paying before. So everyone that locked in any kind of mortgage from the early you'd really have to go back to like the mid 80s. 1980s to really get interest rates in the 30-year that were higher than now. They got close near the 2008 crisis. You could go back. They're very similar. But it appears that, despite what the market's thinking, it's going to be here for a while. So it's just, causing people that got a low interest rate that, they really need to move to want to be able to do it. Because say, for instance, now you're paying a double interest rate on the same value. So you traded in for a similar property, you're now paying upward of 25% more when you factor in the taxes, the new appreciation, the higher rate of interest on the loan. So you're essentially paying significantly more for the same value. And if you upgrade, even more so. And even if you downgrade, you have to downgrade a substantial, more than 25% in price before you even get close to the price of where it was break even with your previous property. So you have to downgrade a fair amount just to pay the same amount. So it's just not a very feasible, environment for a lot of people to want to switch up their arrangement unless they really need to, like a job moving or family relocation reasons or something that really causes them to have to move. But the big moving bubble that occurred in 2020, 2021, 2022, where there was just so much opportunity, everything went online, there's no need to be tied into the city. Mortgage rates were super low, so might as well just buy a place. It was an entirely different market for sure.